Hello and welcome back to our channel Think Investments. Today we're going to be discussing a warning from Robert Kiyosaki, the author of the best-selling book Rich Dad, Poor Dad. In a recent interview, Kiyosaki shared his concerns about the current state of the world economy and warned of a potential financial crash that could be the biggest bust in world history. In this video, we'll be exploring Kiyosaki's warning and what it could mean for your financial future. So let's get started. The pandemic has caused a ripple effect on the job market, with millions of people losing their jobs or experiencing reduced income. This has led to a decrease in consumer spending, which is a major driver of economic growth. As a result, many businesses have struggled to stay afloat, and some have been forced to close their doors permanently. Additionally, the issue of government debt is not a new one, but the pandemic has exacerbated the problem. Many countries were already carrying significant amounts of debt before the pandemic, and the additional debt taken on to support the economy during the pandemic has only added to the problem. If the economy doesn't recover quickly enough, it could lead to a vicious cycle of debt and economic stagnation, which could have long-lasting effects on the global economy. These factors, combined with the uncertainty surrounding the pandemic and its long-term effects, make for a concerning economic outlook that should not be ignored. Kiyosaki's concerns are not unfounded, as the stock market's performance during the pandemic has been largely driven by a handful of tech companies, while many other sectors have struggled to stay afloat. This has led some experts to question whether the market is overvalued and due for a correction, which could have a ripple effect on the entire economy. Additionally, the high levels of government debt could lead to inflation and a devaluation of currencies, which could further exacerbate the economic situation. Kiyosaki's warning serves as a reminder that we should all be taking steps to protect our finances and prepare for the possibility of a financial crash, as it is better to be safe than sorry when it comes to our financial future. It's important to note that paying off high-interest debt and building an emergency fund should be a priority even in times of economic stability. These steps can help you avoid financial stress and provide a solid foundation for your financial future. In addition to these steps, it's also important to diversify your investments and not put all your eggs in one basket. This means investing in a variety of asset classes, such as stocks, bonds, and real estate, to help spread your risk. Staying informed about the state of the economy and regularly reviewing your investment strategy can also help you make informed decisions and adjust your approach as needed. By taking these steps, you can be better prepared for any financial challenges that may arise, whether it's a market crash or an unexpected expense. Remember, being proactive and prepared is always better than being caught off guard. It's important to remember that financial crashes can be a time of opportunity for those who are prepared. While it's natural to feel anxious during a market downturn, it's important to keep a level head and approach the situation with a long-term perspective. During these times, assets can become undervalued, presenting opportunities for investors to buy in at a lower price and potentially reap significant gains in the long term. By staying informed and keeping a watchful eye on the market, you can position yourself to take advantage of these opportunities and come out ahead in the long run. It's important to remember that investing is a long-term game, and while there may be short-term fluctuations, the market tends to trend upwards over time. So, while it's important to take Kiyosaki's warning seriously, it's equally important to approach it with a level head and a willingness to adapt to changing market conditions. By doing so, you can help to protect your finances and position yourself for long-term success. In conclusion, Robert Kiyosaki's warning about a potential financial crash is certainly concerning. The current state of the world economy is uncertain, and there are certainly risks to investing in certain asset classes. However, by taking steps to prepare and protect your finances, you can help to reduce your overall risk and be better prepared for whatever the future may hold. We hope you found this video informative. If you did, please give it a thumbs up and consider subscribing to our channel for more content like this. Thanks for watching, and we'll see you in the next video.